Hello traders, Gary Wagner here. It is 11:46 in Honolulu, 5:46 in New York on Tuesday, 12th day of March, 2024, and this is the evening report for gold and silver. Today, the government released the inflationary numbers for February vis-a-vis the CPI, coming in hotter than even the economists had forecast, which already showed that inflation was on the rise. As a result, we saw a tremendous fall in gold prices. The April contract is currently down $25.10 or 1.15% and fixed at $2,163.90. However, at its low today, it was down about $37. The question is now, does this signal the beginning of a correction? And if so, where could we see gold find support? As you know, I am still exceedingly bullish, but I think that we will have an opportunity to enter at a much more favorable price because I did miss this last move, and I apologize for that. Hopefully the next trade will make up for that. But the first number that we want to look at is the 23.6% retracement at $2,154. That's only about $10 away from current pricing. Now, the reason that I believe that that could be such an important number is the fact that when we look at the high that came in, this high right here, and it occurred on December the 4th, matches up almost to the penny with this price point. The high on that day was $2,152, and the 23.6% retracements at $2,154. So I think that's a number we do want to watch. If it's a shallow correction, we will see the market either find support here or possibly the 38.2% retracement level at $21.24. Below that price point is a top here that occurred in the end of December, and that is at the 50% retracement. So the fact that these fib numbers, tops or key bottoms, provide more important information about potential support and resistance than fib numbers, but when used together, we look for them to have an agreement. And we are seeing that with the 23.6 and 50%. A deeper correction would be 2100. That's the 50% retracement. It's not a fib number. And a deep correction could be as low as $2,075.80. I don't want to rule any of them out, but right now I'm anticipating a more shallow correction. But that could easily be changed because the Federal Reserve meets for its next FOMC meeting next week, and they will also release a updated dot plot which will contain the number of rate cuts the Fed is expected to do this year, next year, and the following year. Silver did decline by 32 cents or 1.30%. As I said yesterday, silver looked bullish. However, my contention was that if gold corrected heavily because of the report, silver would follow suit, which is interesting because the equities markets, for the most part, were fractionally higher. They didn't take much damage today. Nonetheless, silver was down by 32 cents, with the most active contract at $24.39.5. Lastly, the dollar index. We talked about the fact that we identified this long-wicked doji that occurred on Friday, the green candle that came in yesterday. Although it's not as large as we would typically like to see on a morning star, it was nonetheless what I would call a variation. Today would be the confirming candle. We would hope to get a confirmation on the three-river evening star in gold tomorrow. We've already talked about potential points. Now that gold is sold off very strongly today, that gold could find support. That will be based upon market sentiment shifting and absolutely shaped by the FOMC meeting next week. We've talked about points we want to look at for support. So really all I want to focus on is the fact that today's downward move completed a 3-day pattern. Yesterday, we were only able to identify a doji in the star position. It is now officially a three-river evening star. It meets all the criteria. It comes after a defined uptrend, certainly true. The star needs to gap above the green's closing price or real body. And in best case scenario, you get the red candle opening just below the star. We can see that the actual open of gold this morning was just above the real body of the star. It's still a very valid signal. We can see that gold has just opened in Australia. Currently, we are fixed at $2,164, so just right around the close. We want to see how it reacts over the next couple of days, and we certainly want to position ourselves at what we believe is the best available price. So if gold truly moves into a correction, we want to look at specific areas, and we want to then identify a key reversal candlestick pattern. We also want to look at the stochastic oscillator as well as other momentum studies, such as the relative strength index. I've just put that up on the screen for confirmation that the market has moved from a overbought scenario, which we identified as this market was moving up, to a oversold scenario, meaning that it's time to enter from the long side. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.